Hello, hello. Welcome to the closing beat, everybody. How's it going today? Happy Friday. Hope you're having a great day here so far today. Sorry, I'm a little behind. This is the closing beat, just a fun show that we do every day to kind of update you and our customers on the stock market, the good, the bad, the ugly. We'll go over it all. We're financial advisors here at Jazz Wealth. We do things a little bit differently. Our goal is really to help you with your net worth. And so everything that we do is really designed to not only make sure you're investing the right amount, make sure you're investing correctly, right? Make sure help you with your investments. But then from there, just help with any advice you need. We're like the only online advisor where you can actually call and ask questions. And most of the time, I'm going to be the one to help you. So far, so good. Last night we did a class for our customers. We do one every week to try to teach you something new, help you learn a little bit. Last night's was about all of the adjustments we made to our portfolios here, which you can see on our website actually if you click on portfolios. Kind of let you know how the hot dog's made. That's kind of my favorite phrase for that. You know, a lot of times you invest in a fund or something and you have no idea what's really going on. You just sort of accept the performance, good or bad, and you go from there. Our portfolios have zero expense ratios. We do not charge for any transactions or anything, nor is there an expense ratio in there. So I hope you'll check us out at jazzwealth.com. In the meantime, we're playing a fun game. If you go to the website in the bottom right-hand corner of your page, it's called Guess the Dow. You literally just submit a guess. Where do you think the Dow will close next week? You have until tomorrow at about noon to make your guess for next week. And if you're the closest without going over, we will send you $100. And every Friday, we announce the winner. Our winner this week is Antonio D. I won't say his last name, but Antonio D. You know who you are. You guessed 26,54098. And that was the closest guess without going over. So congratulations, Antonio. You're going to get a $100 gift card in the mail. We'll be updating you here in just a few minutes to let you know that you won and ask for your address. All of you that do submit guesses, you guys can vouch for me. We don't like market you in any way. We don't sell your information. We don't do anything. It's just a fun game, right? I'm just happy to have you guys watching. So I have some stats for you on this Guess the Dow this week. Exactly half of you, really close to exactly half, were customers, and the other half were not. That's a record. We haven't hit that before. So just lets you know that we have customers playing. You guys can play as well. If you're one of our customers, we'll just credit your account $100 if you win, or we can send you the gift card too if that's what you prefer. And just to break it down a little further, from where the Dow closed last week, almost 69% of you thought that the Dow would close lower. So the majority of you guessed that the markets would fall. You did correctly. You just weren't the closest without going over there. So really cool there. And let's see, what do we have here? The rest of you thought the markets were going to end up higher than where the Dow closed last week. So a couple bullish people in the mix there. But anyways, that's our winner for the week, Antonio D. Congratulations. We will start this again, of course, starts tomorrow at about noon. That's when the new week starts over. So you have until about tomorrow at noon to submit a guess for next week if you want to see where you think the Dow will finish next week. I'm really interested to see what happens as far as your guesses for that goes. Also, we had a record number of submissions as well. So, hey, well done, guys. We'll play again next week and wish you the best. Interestingly, I play every week. I can't win, but I play, and I'm not even close. So it makes you feel better, right? It's these last, like on Friday, the way the markets move, I've been close sometimes, but I've never been the actual, quote, winner. Even if I was, I'd let you know, but I wouldn't be the one to obviously give myself $100. Hey, let's talk about the stock market today. We got a loss of 98 points on the Dow, 21 on the S&P, 107 on the NASDAQ. That goes down as your weakest area of the market today. Sort of a lot of the waves settling today, if you will. What you have is Trump throwing a rock into a pool, just a big old boulder, and waves are splashing everywhere. The market's a bit wild. You had the Fed throwing a rock into a pool. So it was a really busy week. Add to that, it's the busiest week of earnings, right? Well, it's the busiest in terms of number of total companies reporting. And so you had really a lot to digest throughout the week. All in all, not too bad. So we'll go ahead and start talking about this here, see if I can show you what's going on. Here's the S&P 500. The key word of the day is going to be the 50-day moving average. It's largely known as the sort of midterm trend line, to make it really simple. That's the blue line that you see on the charts there. And a lot of stocks, a lot of sectors, and a lot of these major indices, they were hinting at breaking through the 50-day moving average, but technically that wouldn't be a break today because it did close at the 50-day moving average. And you got a decent little pullback today. Over the whole week there. I am amazed, by the way, at the number of calls and emails that I got from people going, yes, discount, right? This is awesome, right? We want to buy the discount. Interesting, right? Because if you look at the charts, when I've only been wrong about this once over the last 2 years, and that was February of last year. When the markets do take a bit of a beating in the short term, for example, the S&P 500 is down about 3% for the week. That's a decent beating. The S&P over the summer doesn't typically do things like that. So when that happens, I always say, imagine someone getting punched in the face. If your child punches you in the face, you're a little frustrated that your kid's fighting with you, but you're not knocked out. You know what I mean? If Mike Tyson hits you in the face, it's probably not something you're going to remember. It's going to take you a while to wake up, figure out where you're at, see him standing over your body and talking all funny and stuff. It's going to hurt. And so the stock market's basically in that position right now. We took a bit of a beating here in the short term, and it hurts. It is very, very unlikely that next week we wake up and just start recovering all of this week's declines. And now it has happened, right? February is a great example of that decline there. But it has happened. It's just, if you had to bet on what's going to happen, you're not going to bet that the markets make it to highs next week. That's sort of the short end of the thing there. Now, the markets moved lower, of course, on the Fed announcement. You got Trump saying he's going to impose a 10% tariff on the remaining $300 billion of Chinese imports. That'll start September 1st. And he's basically said, hey, if they come to the table and they want to start buying some of our agriculture goods, then he's willing to put that off. He's essentially giving himself an out in case the markets fall too far in the short term here. Anyways, China responded overnight, and they said, yeah, we're going to respond to that. I mean, this is bottom line. If you're going to, put tariffs on the rest of that, we're going to fight back a little bit. And they should, right? I mean, any one of us would have done the same thing. So because of that, you got a lot of weakness today, but stuck right at the 50-day moving average. Now, 73% of the S&P 500 was down today. Almost 3/4 of the entire 505 names in the S&P down on the day by at least some amount. 40% of the S&P 500 lost more than 1%. So a decent down day, at least to start. And then even though we did recover off the lows a little bit, still a decent down day for a lot of stocks. If you're playing along individually in the S&P 500, you probably had some losers in there today and probably throughout the week. I mean, if you didn't, then that's quite impressive. So anyways, that's the S&P 500. In the Dow, you got the Dow lower on the week by about 2.5 points, right? A little bit behind there. But again, the 50-day moving average comes into play. Everyone using that as some short-term support. So you got a lot of buying. The Dow did the best, by the way, as far as the buying off the lows there towards the end of the day. You had a lot of names like Cisco holding things back. We had Caterpillar holding things back today. That lost another almost 2%. We covered Caterpillar last night in our class, by the way, to show you how to use Caterpillar as sort of an economic barometer. If you don't like the idea of looking at all these economic, news that comes out every day. Unemployment came out today, by the way, and payrolls and everything. But if you don't like looking at that stuff, how can you use like one stock symbol, one thing that you could study to kind of tell the health of not only the U.S., but the overall market? So we covered that for you last night in our class. If you're one of our customers, it's right there on the homepage. When you log into the dojo, it'll be the very, very first thing you see. I'll just show you real quick because I'm kind of proud of this thing, right? It looks really sweet. July portfolio update and the market as well, right there on the homepage there. Just click on it, you're good to go. If you haven't checked in a while, all of these are the classes that we offer our customers that really, they're not public, so you can just kind of sort through and learn lots of little different things, right? We try to do things sort of different, talking about some geeky stuff every now and then some really basic stuff along the way. Got some really good classes planned, actually, coming up here. For the NASDAQ, you're lower by about 4% on the week. Only 16 names in the NASDAQ 100 were positive today. That's it. Everyone else was down on the day or flat. I don't think there was any flat, actually. NTAP goes down as your biggest loser on the day, reported earnings, and he guided light for the forward quarter, meaning the current quarter that we're in, NTAP said, we just don't think it's going to be as good as you guys are expecting. Maybe an overreaction there, but the stock took quite a bit of a beating. You got PayPal also now down 10%. That's officially in correction territory. I think it was down about 12 by the end of the day there. That's the lowest price since about June 4th, actually. So a decent down mover there. If we go back to the S&P 500, we said it's down 3% on the week. That makes it the official, that'll be the worst week so far of the year. So we're now 8 months into the year. That would be the worst, right? So 3%. I don't know how else to say it. It's bad. A lot of the retail names took a hit on that tariff news. You had Kohl's. We talked about that yesterday. It gained a little bit back today. Best Buy took a hit on that as well. We talked about Apple and everything. The Gap also lower. And you got a lot of weak names in there, like Urban Outfitters and the like, that all were sort of bigger losers there. Newell Brands There you go. Come on, load up there. Oh, no, that one's not going to load. We're changing some things here in the dojo, so some of these symbols won't load till we get that updated. Gained 14% on the day. Hey, that's pretty good there. They reported earnings, everything was good there, and then they said, you know what, we're going to hold on to our Rubbermaid brand. Rubbermaid is one of the brands that they own. They did have it up for sale. They were trying to sell it before. I think it's been about a year and a half they've been trying to sell it, and they decided they're just going to keep it, right? So not too bad there. All right, let's take a look. Before we go into the sectors, this is typically the time where I go through the individual sectors and we kind of go over what happened. Let's talk about the health of the market here, because you want to ask yourself, like, what do you expect going forward? Even if you're not an investor and you're like, I just want to guess the Dow. What do we think is going to happen next week? Well, you want to look always, you start with the financials and tech stocks. And let's just look in the short term and see what's happened here. So financials have pulled back from their highs, still one of the most undervalued areas in the market in terms of fundamentals. And of course, it sold off today, right? It was a weak start to the day, but recovered almost all of it. Closed just above the 50-day moving average. What's that tell you in the short term? In the short term, we're a little oversold here, and people are starting to think there's a discount in a discounted sector, in an undervalued sector. So a little money rotating in there, and that's got to go down in your relative strength category if you're tracking this sort of thing. Financials showing little relative strength today, at least the big financials, I should say. I use the XLF to track that. And so with the help of a little bounce in the financials, you get the possibility of a bounce in the market. Now, that's not enough. That won't do the trick. Just the financials can't support the market. So we say, go look at some of the tech stocks as well. I use the SMH to track the real geeky semiconductor stocks there. They've also pulled back. Now, in the ultra short term, like just this week, the semiconductors are not they're beaten down, right? I mean, bottom line is just it's been a bad week for the semiconductors. But if you start zooming out, you go, hey, this isn't so bad. How far can we go back? Let's zoom out a little bit more. In the sort of mid-term, intermediate term here, you got a decent uptrend that's just a little bit more volatile than you would expect. I talk about this all the time with our customers, speed and volatility. How do we invest as fast as we need to go without seeing some massive back and forth fluctuations day over day, week over week? And so semiconductors would be an area where you say, okay, we're moving fast, despite everything that's going on. We're moving fast here this year, but it's rather volatile, meaning you have periods of nice excitement there and then periods of really strong pullbacks that give back about half the gains that they've had. So right now you have another period of excitement and then a pullback that's given back about half of the gains. That's excess volatility. And if you are an investor, an active investor, or someone that manages your long-term investments, that's the name of the game, right? Because we all know you just pick a few names, pick a few mutual funds, pick a few exchange-traded funds, and just let it ride. But at the end of the day, if you're really trying to be as fine-tuned as possible here, then that's where you want to tighten up. Where can we try to eliminate some of that volatility? We covered that last night in our class. I won't bother you guys with that today. But the bottom line is the semiconductor is more volatile. In the short term, though, this pullback leads to people interested in buying it. I'm not telling you to go buy it. I'm just saying this is in a pretty nice uptrend here, and most people recognize that this overall is strong, but in the short term, they're going to view that as a discount. So if you put those two things together, the financials and the semiconductors, you go, okay, what's happened? We have pulled back the bow and arrow. I've done this before. Some of you guys will know this one. If you're going to shoot an arrow out of a bow, then you have to pull it back first. When you let go, you get all the excitement, right? So semiconductors and tech stocks, we look at that, we've pulled back that bow and arrow. Could there be a little bit more, right? There's always a little bit more that you could pull, a little bit extra you could give there. The biggest, strongest guy can yank it back and handle that. But for most of us, we're going to pull it back as far as we can, no more muscle left, and then we let go. Well, when we let go in the semiconductors and the financials, you get that support in the market. Now all we need is a little bit of good news, right? We need something good to come out to help us support that. It could be the remaining earnings. It could be positive trade talks. More than likely, that's the focus going forward, positive trade talks. The Fed won't likely say a whole lot here going into next week because they're fresh off their meeting, and I think they still are kind of licking their wounds, wishing they could do things a little bit different there. But you get my picture. So when you're looking at the health of the market short term and you're going, what do we expect here? Are we going to see more downside, right? You get the hint that people are essentially interested in buying dips in this market. And so that leaves you going into the weekend like, okay, I'm not so worried. This isn't so bad. I can handle that. A little pullback is not really that big of a deal there. Okay. Whoa. All right, so I'm on track here. Okay, so let's talk about this. In the S&P 500, you've got only about half of the S&P 500 now above the 50-day moving average. And to be honest with you, I ran that over lunch, so I'm guessing it's going to be a little bit better than that right now as far as the number of stocks over the 50-day moving average, because it did recover, right? So that data is not entirely accurate. So let's just move on. All right, here's your tech stocks here, back towards the 50-day moving average. It acted as support today. Good enough, right? We had a pullback down there, and people started to buy that with all the other areas we just looked at showing a little support. That blue line is really the sort of the key lesson of the day. 66% of the XLK is above the 50-day moving average, and that's your best performer. 66%. That's as good as we get here. Every other sector in the S&P 500 is below the 66% mark. So, you know, it's not great. We were at over 90 just 2 weeks ago, not even a week and a half ago, we were over 90%. So you see that deterioration just a little bit, and you know, it doesn't bother you too much. Utilities. All right, so utilities had a decent day yesterday, recovering because of the bond move to highs there. And so that's your second best in terms of stocks over the 50-day moving average. A lot of that happened yesterday to recover. A lot of stocks in this area are just hanging in there, right? If you own utility stocks, maybe you're using it as a proxy to like a bond play there because you don't like that volatility, better tax treatment and all that stuff. You know, you don't have to school me on that. I understand that you would do that. But the bottom line is a lot of these stocks are just sort of hanging in there, but not bad. I mean, a decent sector there. Also, it is one of the most overvalued areas of the market because people they're going and playing that game, right? They see that, right? So fundamentally, it's a little overpriced. Technically, it's just sort of going sideways. You can't really say it's overpriced there in the short term, but that's utilities. Moving towards the bottom of the list, consumer discretionary. When there's concerns about the market, when there's overall just uncertainty, consumer discretionary tends to be a little more volatile. I get the risk to reward there, but a little more volatile. That did close below the 50-day moving average, and it has the least amount of stocks in this sector over the 50-day moving average. It's right at 30% to be exact, and so, you know, that's where you're at. It's all tariff related. You got Amazon in there. You got Nike. We talked about that. That's in the consumer discretionary space. And you got TJ Maxx. So Nike down 2.5%. Really brutal week to the 200-day moving average. Think about that. We're talking about the 50-day moving average on a lot of stocks. Nike, we're already back down to the 200-day, right? So showing excess weakness there. And then you have, I mentioned TJ Maxx. Also being weak on the day, closing below the 50-day moving average 2 days in a row. That makes it an official break. And those three names, Amazon, Nike, and TJX, make up almost exactly 30% of consumer discretionary. So when you wonder why, what's going on here, guys? Why is the weakness in consumer discretionary? You look at those three names and you go, well, let's call it a third. That's a third of it right there with just those three names. They all had rough weeks, so that's understandable as well. Oil, energy, and oil service stocks continue to be in the news there. Broke to new 52-week lows in terms of oil services. I use the OIH. There's a bunch of others you can use in there that are just slightly different. It's down about 8% on the year, and that's mostly because if you look back over here in January, it was already down, right? It was no standout in terms of that sell-off that we had from October, November, and December. So it's down only about 8% on the year, but overall still pretty beaten down. Not looking pretty good, not looking real good there. Oil, we can use the USO to take a look at the price of oil here in the dojo. We sold off pretty hard yesterday, little recovery today. That's the kind of recovery you expect from like the markets. Got beaten down a little bit there in the short term. Notice it didn't snap back. Took a decent punch yesterday. Oil was just, down over 7%. That's a rough move yesterday. And so because of that, all right, sweet. I got a little bit of a recovery, but I'm not expecting it to just snap back. All right, in terms of the sectors that remain the most undervalued, you have healthcare. I use the XLV for that. It's been floating right around the 200-day moving average. You got financials. I've mentioned that day in and day out here for months now. Still undervalued from a fundamental perspective if you like that sort of thing. I just try to include some of this for you guys. And then energy. Not only the most undervalued, but a little bit oversold here in the short term as well. That lost another 1.5% today. You kind of understand that. That's not too bad. In terms of new highs, new lows, there were only 9 new highs today. That's it. And not a lot of them look very good. 3 of them were financial. You had Western Union with a very interesting day based on earnings there. Sold off way quickly in the morning and then recovered, went to new 52-week highs there. That's Western Union. So the other 2 in the financial space were Hartford Insurance. Just a decent, strong uptrend, but now starting to look a little bit challenged. Remember the comments we made about PayPal last week? looking a little challenged there at the highs. Same thing on Hartford Insurance, a different category here. I understand that, but looking weak there. And then the CBOE hit new 52-week highs yesterday's earnings, and of course today just a little follow through on that one. As far as the new lows, pretty much it was the oil names that were already weak. I'm probably going to stop mentioning these stocks now. I'm getting tired of looking at the same symbols every day. You got Cimarex, that's been hitting new 52-week lows pretty religiously. Add into the mix Halliburton and ConocoPhillips. So Halliburton breaking a new 52-week lows. That one's been just so out of favor lately. And then ConocoPhillips, COP is the symbol on that one, also hitting 52-week lows as that selling pressure just continues there. Not looking good. So anyways, that's just the general market overview for the day. I'll take your questions if you happen to have any, and if most of you have left for the weekend already, that's cool too. While I'm waiting for those questions, earnings on Monday. You got Tyson. Expect to hear something about what they're doing in the plant-based category there to compete with Beyond Meats and Impossible Burger. You got Caesars, you got CLAC, KLA-Tencor, you have Marriott, the hotel chain, and yeah, that'll do the trick there. You have some changes in the S&P 500 that'll take effect next week. So you have Anadarko Petroleum, which was bought out, so that whole deal's about ready to take place there. And so the S&P 500 says, okay, we're going to take out Anadarko Petroleum, and we're going to put in Leidos. LDOS is the symbol. I don't know if I'll get that one. Yeah, I do get that one. So you got Leidos taken over in the S&P 500 for Anadarko Petroleum, and then you have Foot Locker moving down to the S&P 400, will no longer be in the S&P 500. Look, it's like rebalancing a fund. Last night we talked about this with our customers. Look, the S&P's rebalancing. They're like, Foot Locker, you're no good to us anymore. You don't qualify to be in the S&P 500. And so they're going to put in IDEX, which is a symbol IEX, not IDEX. And so that one's going to take over in the S&P 500. That'll take place next week. So I'll probably remind you once or twice more if you're one of those that builds your own index there. I know there's a lot of you that do that, and I applaud that, by the way, but there's an update. A recession coming, yes or no? This happens every time the markets fall. It's way too early to say that. Could we pull back 7 or 8% here in the short term? Yes, and I would love that. I think that'd be perfect if we saw some weakness like we saw in May, real slow and just sort of trending lower, set us up for a rally into the rest of the year, maybe a possible positive trade talk and everything. And yeah, we'll see. Mike says, can you plot guess the Dow on a chart of the Dow so we can see where everyone is guessing? That would be interesting. Yeah, if it's something we continue after the summer, we'll get a little geeky with it. It's a matter of time, really, not having the time to do it. We run some of the stats, but we're working on some really cool things for our customers. So when we have time to do our sort of geeky coding and everything like that, we do that, put them first. You got a few too many email reminders. I'm sorry. Yeah, we're trying to improve over here and switch to our own back end. We're making the dojo not only complete for us, so we don't need to rely on any other software, but we're also trying to make it more complete for you guys. And so some of you have duplicate contact records in there. They should all be gone by now. But if that happens again, I just apologize now. Sorry. Yep. Is there such a thing as a money market ETF or portfolio that you offer be equivalent to Yep, absolutely. It is our low volatility fund, and you might look at the government bond fund in there as well, because that's very liquid still. It's not like you're buying bonds, and so a lot of people that use that for their excess emergency fund. Don't use it for your emergency fund. Use it for your excess emergency fund. And like I mentioned last night, for your emergency fund, we may have some really cool things coming up for you soon. We're still in the testing phase there. What's a reasonable return for a managed 529 in the current market? You're getting 8%. It shouldn't be managed. There's no need to have a 529 managed. I don't mean to take away from whoever you might be working with, but there's just no need. You can do it yourself. You only have a handful of choices anyways. I mean, I think you get rid of the managed part, probably save you a little bit there, and those returns will kick up just a little bit. Yep. Would averaging down on energy, like something like XOM, I didn't point those out. ExxonMobil and Chevron today with their earnings. Exxon missed on earnings by a pretty decent amount. They lost on earnings. Revenues were okay. They raised guidance, but the stock still lost about 1%. And Chevron was also down with their earnings. I believe their earnings were just a touch better. The days are blending together for me right now because it was a good week. But Chevron only it was basically flat. So the question was, would you average down on something like that? If you're a long-term investor, you look at this as a gift. You know what I mean? If you are a short-term trader and you're being active, don't average down. It won't work for you. It just causes you more headache than anything else. But I think I remember your previous comments from before. You are focused on the long term, so I like it. I can't tell you to do it, but I like the idea of averaging down on a discount. See? I fixed it. I didn't say anything wrong. Cool. Will oil ever go up? Yeah, right? I mean, I know it to be a trending commodity, so definitely something to keep in mind there, but wow, what a beat down there. And now oil is in a true technical pattern. I covered this yesterday. The only thing that will move it is a break of that technical pattern. The oil traders are very technical in nature, people that make those major decisions. So I would really be focused on that, just exactly like we talked about yesterday, perfectly. How much longer will earnings move the market around? We're essentially done with the mass excitement, right? Next week will still be exciting. We got still a ton of names to go, but now we'll bleed into the retail area, and most people have sort of discounted. They've wrote this quarter off for retail, so I'm kind of thinking that's already been priced in. But you got about a week and a half left to go, Bruce. Hang tight. Would Impossible Foods be something to get into when it comes out? If you think they're going public, I don't know of any reason why or any announcement that they're going public. It certainly would seem like an opportunity for them. You know they're talking about it after seeing Beyond Meats there. They are a very, very decent competitor in the space. And from what I hear, everybody says Impossible tastes better than Beyond. I'm not eating that stuff, so you can't. There's just no way. I'm not doing it, but I hear everybody says that is much closer and tastes a lot better. So if Impossible Burgers really catches on and you start getting the trend over there, that could be a good tide change for them to go public. You hope that doesn't happen before they go public. Otherwise, you just have that blast off in price like you saw. You'd have to overpay, and yeah, that's maybe a whole video in itself. A Proud says, happy investing. Thanks for all you do. You're very welcome. Thanks for joining us here. Have a great weekend. Yep. Oh, well, cool. You guys talking to each other. I love that, man. And Annette says Impossible does taste better than Beyond Meats. That's all I hear. I haven't had either one of them. I've been to numerous restaurants. Like I mentioned this before. Went on a couple trips, and I saw that the Beyond Meat burger was on there. Not available. Every one of them said they were out. I thought, man, if it's there, maybe I'll take a little test or something. Nope, wasn't available. Which is a good thing if you're in that category or you're an early investor. I understand. Yeah, it's cool with me. It's just not my thing, man. Like with all the people that are into the health craze and I want to know what's in my food. I mean, is it really healthy? It's too early to tell. I'm not messing with that. It's made out of plants. No, it's not. It's made out of plants, but there's a lot of crap that goes into that to make it taste good. You really believe that? That's a weird, I don't know. That's just weird to me. I hope that that's the case, right? That they somehow made some plant taste like meat, and that's really all that it is. But come on, really? Think about that. Someone's going to disagree with me. I'll welcome your comments. I appreciate your comments, good or bad. I'm going to wrap it up there. I hope you have had a good week. And I'm not going to tell you what the clocks are in the background. They are set to a time. They do not move on purpose. And I don't think anybody's really guessed yet. I had a couple customers guess, but they've agreed to remain silent until some of you guys guess. Anyways, have a great weekend, everybody. We'll be back next week, of course. We'll do this all over again. Excited for you. And now I get to go back to work because it's the weekend. What else is going on? See you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interests comes before ours.